All right, what's up, guys? So today we're going to teach a price action technical analysis crash course with one simple goal to get you trading on price action and price action alone so that you don't need EMAs, VMAs, SMAs, DTFs, or any of the other indicators that you see that might confuse you. So the first thing you need to know is that you'll hear me refer to this as being in the nude. Why? Because it's naked price action. There is nothing else that matters except for how the candles are moving on your screen, and that's the only thing that you'll need to succeed in this method, I think, and I hope. Um, you need only an understanding of like six things. The first is daily support and resistance, because you're going to spend a lot of time on your daily chart. You need trend lines so that you know what direction your candles are heading in. You're going to need an understanding of 5 minute retests. You're also going to want to know your targets so that you know where to cut when you're in profit, and your stops so that you know when to give up on the play. And finally, I'm going to teach you about the TLC and the DTF. That's the trend line conquer, and that's the downtrend failure. So the first thing we're going to jump into is go step by step, and we're going to do the daily support and resistance. For some people, this is really basic, but I'm going to walk through it anyway because we're trying to cover everything in this one video. So daily support and resistance is really simple as it comes. You're just going to go ahead and make horizontal lines where you see wicks on your daily chart. Some people use body of candles, some people use wicks. I prefer to use wicks because it tells you where true bottoms and tops are, but to each his own. So I'm going to go through here, and for this one, we're using QQQ as our example. The indexes are probably the most easily tradable with this, and also it has a lot of gaps. And so when you have a lot of gaps to play, what it lets you do is figure out plays that have room to run so that you can make the most maximum profit when you have a high confidence play. So we're going to see the QQQ right here is in a downtrend, right? We've had some bearish market news. We've got inflation going on. We got a ton of things that have just made this thing go down, down, down. But I'm not going to get ahead of ourselves and talk to you too much about trends because first you're going to want to know how these daily SRs work. So for the sake of this, I'm going to stop making my support and resistances right here at about the 300 level. You might be wondering how far back I usually go when I'm making these daily SR levels, and the answer is about a month roughly. Now, if there's a bottom here, like if there's a bottom like there is here, and I don't know what's coming next recently, then I might go all the way back to the area where I see the next support and resistance, just to make things easier. So here, I see that the next candle down would be, I will go with this little guy right here. Let's see. All right, so let's scoot him up. Okay, and now he's letting us know where another bottom is. So you see that it makes sense there because it's at about 280. So we're going to focus on this area here. All right, let's zoom in a little bit. So now that you've got your daily support and resistances, and you're going to want to do this every night so that your chart stays updated, you're probably wondering, how is it that I'm going to play this thing? So the first thing you need to know is think of it like this. At night or in the morning, when you're doing your charting, you're going to use the daily support and resist levels. When you switch to the actual day that the action is happening, so you're trading in the market, you're going to go ahead and switch to your 5 minute. And the reason why you're going to switch to your 5 minute is because that's where you're going to do two things. Number one, you're going to determine where your resistance is, what your trends are, and also it's going to help you kind of determine what your retests are. We'll get to the 5 minute retest later when we're talking a little bit about what's going on in the action. One thing that I do want to note, as you can see here in these white gaps between the days, is that when we're trading this method, we leave pre-market and after hours, extended trading hours on. The reason we leave extended trading hours on is because you can learn just as much in the extended trading hours as you can during the day, because extended trading hours also let you know what buyers and sellers are doing. You might see sells near the top, buys near the bottom, and this all plays into what's happening overall. For example, if I see during the pre-market that at 300, QQQ seems to get up and then get sold. I have a pretty good idea that 300 is a strong level for QQQ, and I can factor that into how I'm playing it. So the first thing to know, you're live and you're in the day, you've got your daily support and resistance. You're going to wait an hour before you do anything. I know it sucks. I know it's painful. I know that you want to play those gaps that open, but this is a method of patience, and really most of the action happens in the middle of the day, toward the end of the day. That's also where you can pick up the multi-baggers because you're going to be riding that IV, so you're going to want to be patient. So the next thing you're going to do is trend lines. The first trend line that you want to make is your long-term trend line that lets you know what's happening that's important during the day. So, for example, let's go here. This is the trading day today on May 23rd, 2022. So I've waited an hour. If I go to, let's see, we're going to open, sorry, it's a military time. So we open here at 6:30 or 13:30. And about an hour in is 14:30. So right here, you see where this little gradient line is? Let me make it clear for you. Again, you'll see 14:30. My dog is chewing on the couch next to me. I apologize. So now that we know that that's 14:30, what we're going to want to do is make our first trend line that lets us know what's happening for that day. So here, it looks like our trend is going to start there from the low of the day. And then over the course of the hour, at 14:30, we're right about here. So I enter usually between, 14:30. That's 7:30 for non-military folks like me. So between 7:30 and 8 or 8:30 is when I'm really starting to look and make my trend line. So here, I can see that it's forming an uptrend for the day. So I'm going to go ahead and put that there. Keep in mind that I'm only factoring in what goes up to this candle because for the sake of example, all this stuff here hasn't happened yet. So now I've got my uptrend on. What I'm looking for specifically is how I'm going to find what I call a TLC or a DTF. So the TLC, which is the trend line conquer, means that your trend line goes above the next daily support or resistance and then holds on the 5-minute. Same thing to the downside. It would be if your trend line was headed downward and then it closed beneath the next daily support resistance and held on a 5-minute. What do I mean by held on the 5-minute? I mean past a retest. So a retest means that not only did the candle close above the level, but then after that, a candle also bounced off that level again. So if a play is running away, then it doesn't count. You cannot play that if it has not touched back on the daily support resistance line that you just crossed. Granted, it could be within a few cents, but it needs to at least show that it survived that level. So here we see an example of a successful retest. See that, oh, sorry, it didn't start beneath. We're going to pretend it started beneath. So this candle here was down, and then it closes above that level. And then you see the next one here, right? It touches that level nearly. So that says to me that it's got some room to go. And then you'll see it goes, crosses, passes the retest, and then you get some upward momentum. Granted, it falls, but that's the general practice. So now, going back to present day, we're looking to figure out how it is that we're going to get our trend breakouts. So here we see a failure on the long-term trend for the day, right? We've drawn our trend line. We're watching, waiting. We're watching, waiting for this moment right here. TLC. And we don't get our TLC because you see it fails at that daily resistance. So what does this let you know? It lets you know that that daily level is important that we identified, but it also lets you know that the bulls don't have enough pressure to get it through. In this case, it's 294. which makes total sense because 294 is a psych level. What is a psych level? A psych level is a level that psychologically traders may buy or sell at. Big round numbers, 294, 295, 298. Big psych levels would be something like 300 right here, something like 290. Levels that show us there may not be a lot of support or resistance above or below that seem like important rounded numbers. So here we see a failure. And then we notice that that failure breaks out to the downside here. But we wouldn't play it there. Why? Because to get the TLC or the downtrend failure, which this one is, see, it's failing in the downtrend, we need to actually see it confirm by crossing that daily support or resistance. So your next daily support or resistance above or below is the most important place that you could cross to get confirmation. So here today, you see during market hours, it never crossed that above daily support resistance. Now, if we had bought puts here, because we saw that it failed, our puts wouldn't have paid. And why wouldn't our puts have paid? Because it never crossed another daily support resistance level to show us that it meant business. Let's go find an example of one that works. So here, on what day is that? 22nd. So yesterday, an hour into the trading, right? So 13:30, 6:30 to about 7:30 to 8. If we use that as the cutoff, right? So this is the cutoff point because the rest happened after we're looking at. We have our downtrend right here, right? That would have been our day-long downtrend. So we put our downtrend and then we wait patiently for it to break through the daily support resistance to the downside. And what does it do? It does. So once we break through here, we've got a successful close beneath. And then on the next candle, we've got a successful retest. So we know that it's going down because it followed our downtrend. It broke through the next lower daily support and resistance and it passed the retest. So now I'm buying puts. Boom, puts to my target. My target was 294. Why is it 294? Because it's the next daily support or resistance that's available. It would be the same thing to the upside. All you're doing is moving within daily support and resistances, selling or buying when you break through them, or selling or buying when you reach a target. So here, I would have sold. Now, would I have made more money? Here, I would have sold. Would I have made more money if I would have stayed in it and gone down? I sure would have. But I still made a tiny little profit here, particularly if it's a 0 DTE or 2 DTE, because we're using an index. Now, another way you could do this, remember I mentioned the long-term trends, is you also now have short-term trends. So, when I'm looking at this breakthrough here, my first thought should be, what is the short-term trend? This is the short-term trend. So either way you slice it, it was time to get out of that play. One, it bounced off the daily support resistance. That bounce off the daily support resistance is confirmed by this short-term trend breakout. And then it stops right there. Another question you might have is my computer started going a little crazy. Where is my stop? So your stop is going to be like your target. Your stop is the daily support and resistance that is lower or higher than the daily support resistance you entered at. So for example, if I entered here, my stop would be way up here. And the reason why that's my stop is because that lets me know that that daily support and resistance is no longer going to give me the bounce that I need. So to summarize that, your target is going to be the next daily support and resistance after you break the daily support and resistance of your entry. Your stop is going to be the daily support or resistance that's above or below the line that you entered at, if that makes sense. So that's pretty much how you trade price action. It's extremely simple. All you're doing is waiting for breakouts or you're waiting for breakdowns. Your long-term trend line is the most important. So if you see here, for example, on our long-term trend, we got a breakout. But you notice that that breakout never crossed. That breakout didn't cross, so we didn't take it there. You can, however, take a breakout if the breakout also confirms another daily support resistance level. So we've got a double bottom here. It retests that level nearly, and then it comes up out of the downtrend. I still wouldn't have taken it because it's risky, but if it had come back down and tested and touched right here and gone back up, I would have gotten in. So that's kind of part one of this where I go through it pretty quickly. I know that there's going to be a lot of questions, and how do you do this, and how did you think about that? So I'll do some live run-throughs, but for now, all you need to know is you move within your daily support and resistance, and you follow your trend lines.